Okay, good afternoon, everyone. As I've said to the first few students, I hope you guys had a wonderful day. We're going to start with the class now. I might give another minute or so for students to join, but let's first go through the important notes. First up is the attendance register. It is crucial that you guys please post your student number in the chat section. It is being monitored, and obviously, the higher the demand for the classes, the more they will be available. So we can only monitor the demand if we have your number in the attendance register as proof of how many students showed up for the class. Then secondly, the one-on-one sessions can still be arranged. There's a link to a UNISA platform. I do have that link. You can send me a WhatsApp. If you have a specific problem, you will go to that platform and you will log a query and you select the appropriate module code, and then I will receive it and then book a date and time with you where we can discuss whatever it is that you might be struggling with. Then moving on to the WhatsApp group. So I've got various WhatsApp groups that I'm for modules that I'm facilitating for UNISA. FAC1601 was only added recently due to students asking for the specific module. So please join the WhatsApp group by sending me your name and module code. So remember, there's various modules that I present. I need to know both your name and the module code that you would like me to use to add you to the correct group. So please send that for me to that number, and I will add you to the group. Then solutions, session notes, and other communication relevant to this module will also be shared on that specific group. So it is rather important that you do make yourself part of that group. You will be informed of class rescheduling if anything should happen and I cannot present the class, or there's students that's asking me to postpone or reschedule due to exams, similar as to what happened last week, then it's easy for me to communicate with you and let you know about it. So I'm going to give just another 1 minute for students to join. I just received notification that some students will want to join. So I'm literally going to give 1 minute and then we will start. Okay, guys, let's start. I'm first going to start with a small introduction just to see where we are with this specific module and where in accounting are we finding ourselves. Okay, so first up, this specific module, as you might known by having gone through the study guide by now, you would know that we are dealing with specific types of businesses, types of avenues that you can use to run a business and make a profit, because that's the reason why we all would want to start a business, or anyone that runs a business wants to start a business, is to make a profit. But there's various business forms that we can use. So I'm going to start right in the beginning with accounting. So it is very important never to lose sight, especially in this module, of your previous accounting knowledge. Knowledge such as the accounting cycle. Okay, so the accounting cycle says we first start with a transaction. What proves that there's a transaction? A source document, an invoice, a receipt, a delivery note, a goods received note, etc. Once we have that, we need to record it in the first book of entry. And that's all my journals. So that's the first place where it enters the financial system, where accounting starts. If you went to the shop, you bought something, and you had to come back to the business and you had to post it. And you would have used a specific journal to do that. Once you've done that, you move on to the general ledger. And the general ledger is your T accounts. Once you've entered it or posted it into the T account, you'll make your way to your trial balance. And remember, there's various trial balances. They are your very first trial balance. Then you have all your year-end adjustments or transactions that have not yet been taken into account. And you have to account for that using the same process, the same first book of entry, then general ledger, and eventually you will get to a post-adjustment trial balance. That trial balance you will use to take to your annual financial statements, which is your statement of financial position, your statement of comprehensive income, your cash flow statement, and your statement of changes in equity and your notes. Those are all your annual financial statements, all of them. And after that, you will start with decision making. So that's the accounting cycle. So don't lose sight of that, because in all of this, you're going to use all of that still in all your various forms of businesses, your sole proprietorship, partnership, your closed corporations, companies, So you're going to use all of that. And what is very important in this specific module is that the specific entity that you choose, or the specific entity that is going to be used in your exam or what you will be tested on, is only a small part of what you will be tested on. Most of the calculations will still be normal accounting transactions. All of them will have assets, equity, liabilities, income, and expenditure. And you need to know how you need to enter transactions into your accounting system, what to debit and what to credit. So always remember what I'm putting on the screen now. This will help you a lot in the exam. Always remember, assets increase on the debit side and decrease on the credit side. Equity, opposite. Same with liabilities. Same with income. And expenditure is different because these two items gives me my net profit, and my net profit eventually goes to equity. So it is very important that you understand what I've just put on the screen, because you will be tested in the exam in each question on how to classify transactions, how to account for transactions. The question will just be split into either one of these. But all four of them still have the same type of accounts. So if you do not know and if you do not understand this section, then that is the underlying problem. That is where you need to focus. Only once you understand how to deal with assets, how to deal with equity, liabilities, income and expenditure, then you can understand what the difference is between a sole proprietorship, a partnership, a closed corporation, and a company. Because that's where the difference now comes in. All of these have various unique accounts. Just a few unique accounts that make them what they are. In a partnership, we will have 4 or 5 accounts that we will never see in a sole proprietorship. We will never see in a closed corporation, and the same with a closed corporation. We will have 4 to 5 accounts that we will never see in each of the others. A company, for instance, can either be a private company or a listed company. So you need to know how to deal with the shares of a company. So very important that you do understand assets, equity, liability, income, and expenditure before you can understand a sole proprietorship, a partnership, a closed corporation, and a company. So I'm going to start tonight with partnerships, and we're going to do 1 or 2 questions on partnerships, and that's where the difference comes in with these sessions as opposed to a facet session or a tutor or a session where you're receiving a lecture. These are practical classes where I go through previous exam questions and I explain the underlying subject matter. So this is not a session where you will receive slides or where you will receive things like that. You already need to come prepared. So for this session, we are going to be doing partnerships. And we're probably going to be doing that for the next session this week. We will communicate the next session depending on the outcome of this class. We will rate whether there should be a follow-up session, and then I will continue with partnerships for this week. Next week we will be doing closed corporations, and the same transactions that you will see in partnerships is what you will see in closed corporations. Yes, there are unique questions that is unique to a partnership and unique to a closed corporation and some of the others, but in essence, you need to understand the underlying concept of accounting before any of the differences between those 4 type of businesses will make sense. So that's where you need to emphasize your training. focus your training on that, and a lot of these things will make sense and you won't struggle. So before I continue, I just need to confirm that everyone has posted their student number in the chat section. I don't see a lot of student numbers, so I need to ask that you please take the next minute while I get the question up to please post your student number. For those that do not have or that are not part of the WhatsApp group yet, please send me a WhatsApp. I will add you to the group. The question that we will be doing will be shared on that group. So I'm just putting up the slide again so that you can send me a WhatsApp, and that's the question that we will be doing. So there's the WhatsApp number. If you send me a WhatsApp within the next minute, I can send you the question that we will be doing. Hey guys, I think we can start. Any questions? I see someone has got their hand up. I've tried to send the questions to as many students as possible now, those that have joined the group. So if you haven't received the questions, yeah, I've tried to send them to as many as I can. So any other questions before I start? Okay, one additional note to this session is that this is a participatory session. In other words, you have to get your computer or papers ready on your side. You will be doing the question with me because that's the only way you will grasp and understand whatever it is that I'm going to be doing, and also to be able to be in the position to understand what you are struggling with. So it's very important that you follow what we are doing and do it with me, because there's going to be times where I'm going to pause and I'm going to say, please calculate this on your own, and then I would like you to I'm I'm going to give you 5 minutes, and you will be able to use that 5 minutes to do the question on your own. So that's how the layout of the question and how the session will work. Then lastly, the questions that I'm doing are old exam questions. So I'm going to be doing them in a way that has been proven very effective in previous sessions, and in a way that I feel it will be best for you to attempt it in the exam. However, it remains your prerogative, however you want to approach the exam. So without further ado, let's continue. So if you receive your question paper, the first thing that you will always do is you go to the required section first. You don't just read through all the information. Read the required first, because then you will know what it is that the question wants from you and what you need to be on the lookout for. Because if you don't do that, you will first read through all the information, then read what is required, and then you will have to go read through it again because you probably didn't pay attention to what it is that you are actually reading, firstly, and secondly, you would have made incorrect assumptions of what it is that they might be asking. So read the required first, and then you can be fine-tuned and you can be tuned in into what you must be on the lookout for. So read the required first and then focus on the important information. So the required 1.1 is prepare the statement of profit or loss and other comprehensive income of A&S Supermarket for the year ended 31 December 2009. Your answer must comply with the requirements of international financial reporting standards appropriate to the business of the partnership. Notes and comparative figures are not required. Guys, please make sure that your mics are muted, please. 1.2, prepare the current account of Amanda in the general ledger of A&S Supermarket for the year ended 31 December 2009. The profit or loss for the year need not be appropriated and do not balance the account. Guys, very important. In the required section, they are telling you what they want, for when they want it, and how they want it. If you did not read 1.2 properly, let's blame exam stress. And if you didn't read that question properly, you would have struggled with that 5 marks. I can guarantee it, because they are asking you to prepare the current account of Amanda. So the current account is the account of each partner in a partnership has got his own account, and that account deals with his profit share. All his personal transactions with the company will go to that account. But they are very specific in what they want there. They say the profit or loss for the year need not be appropriated and do not balance the account. So they are telling you they don't do the appropriation account, and they are also telling to not balance Amanda's account. Just make notes of the relevant transactions that are given in the information in the account. So the best way also to start a question in my experience is to draw a layout of your answer first. Draw a skeleton. You know what it is what they want. They are very specific there. So let's read that required again. They say prepare the statement of profit and loss profit or loss and other comprehensive income for A&S Supermarket. So let's do that. And please start with me. So A&S Supermarket statement of profit or loss and other comprehensive income for the period ended when 31 December 2009, 31/12/2009, and that in most exams already counts marks, the fact that you know what it needs to look like. But now we can't start with that's the statement, because we don't know, are they just deriving revenue from a specific thing, a line of business or stream of income, or are they a sales company? Do they have sales or cost of sales? So let's quickly just have a glance at the given information. So here they say Amanda and Sipindile are in a partnership Trading as A&S Supermarket. The following information pertains to the partnership. And here we have a list of balances as at 31 December 2009. And something that I also find very useful is as you go through this list of balances, categorize them immediately. Remember, I gave you a list of all the various accounts that you will have. You will have assets, equity, liability, income, and expenditure. Classify your accounts immediately. Very important. It will save you time. So let's do that. So first up, we have capital, Amanda and Sipendile. We have the capital accounts. Very important. 2 notes that you immediately need to make there. Opening balance, equity. Opening balance, equity for both of them. Then we have the 2 current accounts. Also, opening balances, equity. Very important. The current account of Amanda is a credit, meaning it's a favorable account for Amanda. Spendile has got a debit balance, meaning he owes the partnership. Land and buildings at cost, statement of financial position, assets. Vehicles at cost, statement of financial position, assets. Accumulated depreciation for vehicles, statement of financial position, assets, and then you make a note and you say depreciation question mark. Because remember, they might not have included depreciation yet. So be on the lookout for that. Then we have debtors and creditors control. First one is a current asset. Second one is a current liability. Bank has got a debit balance, If we look at our list of balances again, if an asset has got a debit balance, it is favorable. So that means bank has got a favorable balance. There's a fixed deposit, Third National Bank, so you can probably make a note there. Interest income, question mark. Then we have drawings, equity, loan to Spendile, and circle loan 2. That means for the partnership, it is an asset. We lend money to someone. So someone owes us money. Then we have loan from Amanda. She gave the partnership money, and that will attract interest expense, question mark. Then allowance for credit losses. Remember, if there's any movement in the allowance for credit losses, that movement will go through the statement of profit or loss and other comprehensive income. So there might be an adjustment. So you can just make there and say adjustment, SOCI, question mark, statement of comprehensive income. Sales and purchases. Sales and purchases. That immediately tells me that I will start my statement of profit or loss with sales and cost of sales. Guys, please a reminder to please post your student number. If we do not have all the student numbers, the continuation of these classes might be in jeopardy, as it might not attract the right number of students to validate this resource being expended. So please make sure that you've posted your student number. So we have sales, cost of sales, and that will give me gross profit. So you can already go and draw that line. We don't know what the figure is, but we know that that amount will be there. After gross profit, we get other income. Other income includes finance income. So other income, leave about, say, 4 lines open. And remember, you've got space in the exam, so use that space. Don't limit yourself. leave about 4 spaces, and then you say we need to deal now with the expenses, administration, distribution, and other expenses. And you can already remember, you need to get marks. When we went through the information, we saw that there is a fixed deposit. We saw that there is accumulated depreciation, and you already made those notes. I see there's students asking for where they can get the question paper that we are working through. I shared it on the group. So as I said in the beginning of the session, you need to be ask me to invite you to the group. I'll send you the link, and then I'll send you the questions. So the questions have been shared on the group. Okay, so just to get back to what I was busy saying there, you can already see there's accumulated depreciation. So note that down. Remember, you want to get marks, and you're going to forget about it. So right there, depreciation. Then the information said there's a fixed deposit. I'm just going to go up until sales. Okay, it says fixed deposit. If you have a fixed deposit, you will probably earn interest income. So go and to other income and say interest on fixed deposit. Then we have the loans to the partners, loan to a partner and loan from a partner. That we will get from their current account. So don't put that in a separate income. We have the allowance for credit losses. We do not know where that balance will go to, because if that balance increases, it will go to expenses. If it decreases, it will go to income. So you can make a note there next to allowance for credit losses. Make an up arrow and say that will go, if it goes up, it will go to expenses. If it goes down, it will go to income, the movement. And then we had sales, we had purchases. So take that amount of sales and go put it on your answer sheet already, 650,000. So go to sales and say 650,000. Guys, what I'm going to try and do, I hope it's not going to make it too small. Let's put the question paper here. If it's making it too small, just tell me and I'll try and make it bigger again. But you can zoom on your device, so use that functionality as well. So I've taken the sales figure, I've taken that out now, and I've put it there. You already have a mark. Cost of sales must be calculated because we have purchases and we have inventory. Please write next to inventory, opening inventory. So now that you know you can't just write it there, make a calculation and say refer to calc 1. Okay, and then on a separate page, you will start your calculations. You'll say calculations. You will say calculation 1. And calculation 1 deals with cost of sales. To calculate cost of sales, what do we need? And see these structures you should already know. So this is the way I want you to think in the exam. Cost of sales already has got a fixed structure. You know you need opening balance. You need purchases, cost of sales, and that will give you your closing balance. Agreed? If I take my opening balance, I add my purchases, I subtract what I've sold, I need to get to my closing balance. So remember that. There they give the opening balance already. They say the opening balance is 70,800. Yeah, the opening balance 70,800. Opening balance 70,800. They give you purchases 304,000. We don't know what the cost of sales is yet, and they didn't give us closing balance yet. But you have a calculation. You know you need to go fill it in. Let's continue. Salaries and wages. Let's go to back to the layout of your statement of profit and loss. Salaries and wages. We do not know whether it's the final amount yet, so we will say 132,916. Then we have water and electricity. We don't know if it's the final amount, or then will there be any adjustments. So we can put that amount in there as 4,700 in brackets. Then we have interest expense loan from Amanda. Let's leave that one, just make a star next to it. Then we have settlement discount granted. Don't know if that's the final amount. Any questions so far? Are you guys happy with settlement discount granted there?
Yeah, I just wanted to ask, that settlement discount, don't we put it against sales?
Thank you, Juna. That's why I'm pausing there. What do we always do with settlement discount? Settlement discount. Okay.
Unless it's
I'm not sure if you guys can hear me. But anyway, you take settlement discount as an expense. So it is an expense, but you do not list it under administration, distribution, and other expenses. That's why you have the sales line. It is a sales cost. So you will say settlement discount. So it will be the 650,000 less the settlement discount. And the settlement discount is 3,800. So put it there. We don't know if that's the final adjustment to sales, but at least you already know that you have 2 marks there. Then we have interest income from the fixed deposit, 1710. 1710. Then we have stationery consumed. Please pay attention to the word consumed, because only stationery consumed will be an expense. Remember, if there's stationery still on hand at the end of the year, that will go to current assets and will not form part of your final expense. So please be very careful to make sure that that 5,000 is really consumed. So you must look at the additional information. So let's say stationery, 5,000. Then we have telephone expenses. Put it in brackets, telephone expenses, 26,208. And insurance insurance on purchases. What forms part of purchases? Any cost that you incur to bring inventory from the supplier to your premises and that places you in a position to sell it. All those costs must be part of purchases and must form part of the value of your inventory. So there we are talking about anything like insurance on purchases. What else? Non-refundable taxes, import duties, in other words.
carriage and purchases.
Say again.
Carriage and purchases.
Perfect. Any cost that you incur to bring it to your place of business. In other words, where you can sell it. So there you will already have, by your purchases, you must include that value of 4,500. The insurance on purchases. Then we have freight on sales. Where does freight on sales go?
So an expense. Should be an expense.
It is just a normal expense. Freight on sales is a sales cost. It is the same as packaging material. It is a cost we incur to sell our stuff, the same as we incur depreciation, the same as we incur salaries. So that forms part of normal administration and distribution costs. So freight on sales. Freight on sales, 3,200. So there we have used this information as effectively as possible. Now we need to read the most important part of the given information. The partnership agreement. They say here, the partners, Amanda and Spindile, share the profits or losses in the ratio of 3:2. So that means if I have to look at the profit share, it means there are 5 parts. So if it's 3:2, it means 3/5 will be to the one partner and 2/5 will be Spindile. If I've read the order correctly there. Yes. So that's what that means. Get back to the question. Interest at 10% per annum is allowed on the opening balances. Please highlight opening balances of the partners' capital accounts. Where does that go to? Any interest?
Go to,
yes.
I think it should go to appropriation, not appropriation, but the statement of changes in equity.
It must definitely go to the statement of changes in equity, but it will go to
current account.
It will go to the current account of Amanda. Because the current account, as I said in the beginning, is almost a transactional account between the business and the partnership. Because remember, the partners are not the partnership. The partnership is a business aimed at making profit. So you must always try and keep the partners separate from the business. And the way we do that is we create a current account within the partnership's books. And this account will detail all the transactions between the partnership and the partner, the individual, whoever is the partner. So interest to the partner, commission to the partner, any sales or drawings that we did between the partnership and the partner, that will go to the current account. So very important information here. So they say interest of 10% per annum is allowed on the opening balances of the partner's capital accounts. So if we go to the capital accounts, we do have the opening balances. Remember the note I asked you to make in the beginning of the question? That is the opening balances. Okay, so very important information there. We'll get back to that. Amanda's entitled to a 10% commission on sales. So she also gets commission, and that will also go to her current account. Another important note with partners, in this partnership agreement, they can also sometimes state that the partners are entitled to a salary. What is important to note there is that if the partners take a salary during the month or during the year, that forms part of drawings, not salaries. It forms part of drawings and will go to the current account of the partner. Drawings will go to the debit side, and salaries not yet taken by the partner will go to the credit side. Guys, if you've got any questions, you can unmute your mics and ask that question. This is your session, and it's your session to ask questions. Just a reminder again to please post your student number if you have not yet done so as well, please. Okay, so let's look at the year-end adjustments. In other words, adjustments that we still need to make. So they say inventory on hand. Tandeka.
Yes, sir.
I see you've got your hand up. Do you have a question?
Yes, yes. Can you please repeat it for me? If they took salaries during the year, you said?
Yes, 100%.
You said where we record it?
So if a partner, so partner salaries. So two things. It can either be accrued, in other words, not yet taken, or it can be paid out, meaning taken. If this happens, it goes to the credit side of the current account. In other words, we increase what we owe the partner. If it's taken, it goes to the debit side. Sorry. Come on. The debit side of drawings. And at year end, we take it to the debit side of current account. So everything we owe the partner will go to the credit side, and everything the partner already took will go to the debit side.
Understandable, sir.
So basically, if we only talk about salaries and we look at the current account of a partner, his total salary will be on this side, and salary taken will be on this side. So in other words, what is left owed to him will be on this side. So his total salary that he's entitled to will go to the credit side, and whatever he has taken will be on the debit side as part of drawings. Everybody happy there? If you have got any questions, guys, please, you don't have to put up your hand. Tandeka, thank you for putting up your hand, but you don't have to. You can just unmute your mic and talk. I promise you I won't feel offended, because most of the time I've got 3 screens open here in front of me. So most of the time I'm not even looking on the screen where Teams is open. I'm just working on the screen that I'm sharing with you guys. So I might not see a hand go up. You can unmute and interrupt me. Like I said, I won't be offended at all. This is your session. Okay, let's go back to the question. Find it, there we go. So here we have 3.1 as the first year end adjustment. They give us the inventory on hand at 31 December 2009. In other words, basically the stock count showed these amounts. First up is merchandise, so that is trading inventory. So we need to go and say trading inventory closing balance for our inventory account is 83,000. So do you guys agree with me? We can now calculate what cost of sales is supposed to be. So purchases, we said is the 304 plus the 4,500. So that is 304 plus 4,500. Let's put it that side. So cost of sales is the balancing figure. So it is that amount, or let's rather make it a negative. So let's work inverse. It's that amount minus the two increases. So that should be the cost of sales. Any questions? Okay. Let's take that to the cost of sales line. So there I said cost of sales. So let's take, I'm just going to move that a bit. There, cost of sales equals that cost of sales figure that we calculated. Calculation 1. Okay, let's move on with the adjustments. On 31 December, guys, just give me a moment. And here I think we're going to have a situation where I would like you guys to participate. So 3.2 says, so get your pens and calculators ready. 3.2 says, on 30 September 2009, a delivery vehicle was purchased for 85,000 Rand cash. All the necessary entries were made in the books. So take note of that. All the entries were made for the purchase. The depreciation must be provided on vehicles at 10% per annum according to the straight line method. Can I ask you guys to please calculate for me the depreciation value? So I'm going to put, I'm not sure how you can, if you don't have the question, but there's the balance. So if you want the balance for vehicles, quickly write down the vehicles at cost. It's the closing balance of 198, and accumulated depreciation opening balance 42,000 opening balance, and then they say the vehicle was purchased 30 September 2009 for 85,000 Rand cash, and all the necessary entries were made in the books. Depreciation must be provided on vehicles at 10% per annum according to the straight line method. I'm going to give you 2 to 3 minutes to please calculate the depreciation for me. And if you are done, please put up your hand. Use the hand functionality. It will just be an indication to me as to who is done with the question. Even if you don't, if you can't do the question, also just put up your hand. So if you are struggling and you can't do the question, use the hand functionality to indicate that you are done with the attempt, and then I will unmute if it is sooner. So let's say 3 minutes, and let's see who can calculate the depreciation for me, please.
Richard. Hello. Charles.
And who's sorry? I'm Tony speaking.
Can we please see the full amount, the cost of the vehicles, please?
Okay, I'll scroll up for you.
Thank you.
100%. Okay, guys, let's have a look. So let's go to depreciation. And we say Calc 2. It's extremely important in the exam to use a very effective and accurate referencing system if you are using calculations. Even if you calculated a section of your calculation incorrectly, and to take that incorrectly calculated amount to the right place in your statement of profit or loss and other comprehensive income, you will still get your mark for having done that. So don't lose marks by not showing your marker where you did your calculation. Let's say calculation or Calc 2, depreciation. Depreciation. So let's work with cost. What is so we have the closing cost. The closing cost is 198,000. It's 198. They say they purchased the vehicle during the year. In other words, we need to subtract it to work with the two values separately. So the closing cost less purchased vehicle. The vehicle's value is 85,000. So that will give us opening cost and depreciation for those vehicles that we had for the whole year is depreciation at 10%, and that's for the full year, times 0.10. There's my first depreciation amount. Then I say depreciation on the new vehicle. The cost was 85,000. Depreciation should be calculated at 10%, but for only a portion of the year. September. No, sorry, where did we buy the year? So September, October,
November, and December. Those 3 months.
So times 3/12. Times 0.1 times 3/12. There's the other depreciation amount. So total depreciation expense will be the two values added together. Everybody happy with that? Everybody happy?
Yes, it's perfect.
100%. Okay. Let's see what other information they give us. Okay, we dealt with depreciation. Then they said they said the loan from Amanda was obtained on the 1st of September 2007 at 5% interest per annum. The loan will be repaid in 5 equal annual installments starting from the 31st of December 2010. The interest must be paid to Amanda annually. Okay, so here we must see when will it start. It will start on the 31st of December 2010, in other words, next year, not the year that we are dealing with. So we will still be dealing with the full amount that is currently shown in the list of balances that were obtained. Is everybody happy with that? So the loan from Amanda will be 170,000. So let's do a calculation. Calculation 3, loan from Amanda. Loan value, 170,000 Rand. No repayments have yet been made, so interest is calculated at 5%. I think, yeah, 5%. Everybody happy with that? Where must we include that 5%?
Finance cost.
Yeah, it will be included in finance costs since it's not a loan to one of the directors. Okay, so it's a loan from one of the directors. We could have borrowed that money from one of the banks as well. So interest at 5% will be 170,000 times 5%, 8,500. Let's go to the face of our statement of profit and loss and other comprehensive income. Let's leave, say, about another 4 lines open, and we will say finance cost, loan from partner. The loan from partner, we reference, and we say see Calc 3, and we will collect that amount from our calculation, 8,500. Okay. During the financial year, 3.5, during the financial year, Spindile was granted an interest-free loan, which he agreed to settle in full on 30 June 2010. How does that affect our statement of profit and loss and other comprehensive income, if it does? It will not affect our statement of profit and loss at all. It will only affect the current account of the partner in question. Everybody happy with that?
Yes.
100%. Okay, 3.6. The water and electricity account of 400 Rand for December 2009 was received on 10 January 2010. So it was received after we obtained the list of these balances. So that means that water and electricity account is not 100% updated. There's an amount that's accrued. So we need to go to water and electricity and add that 400,000 Rand there. I think it's 400 Rand. I'll scroll too quickly now. Yeah, 400 Rand. So that's done. Everybody happy? Then let's move on to 3.7. A debtor owing the business 5,560 has for the past financial year defaulted on his payments, and his account must be written off as irrecoverable. The allowance for credit losses must be adjusted to 3,200. So we sit here with two problems. We sit here with bad debt or credit losses, bad debts or credit losses, and we sit with an adjustment to our allowance for credit losses. Okay. So let's make another line and we say credit losses. So the credit loss, firstly, is the 5,560. Now we must go and have a look at the 3,200. So let's go to the information that was given. Here they say the allowance for credit losses, 2,500. So 2,500 is what it is currently. It now needs to be adjusted to 3,200. So let's take the balance that wasn't given to us, the allowance for credit losses, the 2,500 less the 3,200, and we will get an adjustment of 700 Rand. So credit losses plus 700 Rand. Everybody happy with that? Is everybody happy with that?
No.
Yes.
I have a yes and I have a no.
There's conflict of interest. Some are saying yes, some saying no. So I think you have to repeat it.
I will repeat. Okay, so credit losses is, in the past, we used to have a line where we said adjustment for provision for doubtful debts. And that line would have been the 700 Rand. And we would have had a separate line for credit losses. Now we put those two together under the new accounting structure. So that's the one part. As to why it must be there. If we lose a debtor, it is bad debts, and bad debts is an expense. Whoever said they don't understand, just confirm for me that part, that you are happy with that part, that you are happy that the 5,560 is an expense.
Yes.
Okay. So now we see the other situation is that we make a provision. So the company, the owners or the partners look at the recovery, the probability of recovering outstanding debt, and they look at the debt that was written off this year, and then they say, we, on best estimate, we can also assume that an X amount will also not be recovered. So in the previous year, they said they believe 2,500 is currently the balance our doubtful debt balance. The moment that we touch that amount, the difference, the movement must go through my statement of profit and loss and other comprehensive income. If it moves up, in other words, if we increase that provision, it means we are saying based on best estimate that there will be more people falling into bad debt. We will be writing off more credit losses. So we have to adjust that balance upwards, and that upwards movement will go to my statement of comprehensive income, and that's the 700 Rand. It's the movement from that 2,500 to the 3,200. Everybody happy with that?
Yes.
Okay, 100%.
Yes.
Then I'm happy. Okay, so let's move on to 3.8. During the financial year, 40,000 Rand was paid to Amanda as commission on sales. These payments were recorded in the salaries and wages account. Now, what did we say earlier? No payment to partners relating to salaries, relating to commission, or any such must form part of my normal salaries and wages. We have a separate account with the partner, and we will account for that 40,000 in that account with the partner. So let's go to salaries and wages, and we say minus that 40,000, because the question tells us that that 40,000 Rand is already included in salaries and wages. So we will take it out of the salaries and wages and take it to the current account, but we will get to the current account of Amanda. Everybody happy? So let's look at the current account of Amanda while we're at it. I will put it in the question as well, and in the answer that I'll be sharing. So let's say current account Amanda. Remember, she's entitled to commission. We know that. We haven't calculated it yet. We also know that the question tells us here, in the beginning, if we look at the current account for Amanda, that she has got a credit balance. So we know that the balance must be on the credit side. Here will be a balance. On the 1st of the 1st of January, there's a balance of 60,000. Then we know at year end, she's entitled to commission. We don't know what it's yet because we haven't calculated it. But let's just put the amount there, or the name there. What else do we know? We also know that she already took the 40,000 Rand commission because the question tells us that. The question says here that during the financial year, 40,000 was paid to Amanda as commission on sales. These payments were recorded in the salaries and wages account. So let's go to the salaries and wages account, and we say, take it out of salaries and wages and take it to drawings. So on the 31st of the 12th, we will have a drawings account. But I'm not yet done with the entire question. So I don't know whether there might be additional drawings. So I'm just going to say 40,000 for now. So guys, if you're not happy, the rules are you unmute your mic and you ask me. So this is as if we are in a class situation. So just unmute your mic and ask me the question. And then just another reminder, as I will continue to do, is to please post your student number in the chat section. Okay, so there we have that part. So let's go back to the question. 3.9, the fixed deposit at Third National Bank was made on the 1st of January 2008 for a period of 5 years at 9% interest per annum. The interest is receivable at the end of each borrowing year. Okay, do we know the interest, what will that interest be? What's the value of the fixed deposit? The value of the fixed deposit at Third National Bank is 19,000. What will the interest be? They give it to us.
1710.
So there's the 1710. So everybody happy with that? Is there anything else that we didn't take into account yet? Let's just look at the drawings. There's the drawings for Amanda. Because remember I said when I did this part, I'm not sure whether there are any drawings yet. There I see drawings in the question, 64,800. So plus 64,800. So that will give me 104,800. 104,800. Sticking with Amanda, they said interest at 10% per annum is allowed on the opening balance of the partner's capital accounts. So I also know that this partner is entitled to interest on her capital account. What is her opening? What's the opening balance there? Capital account opening balance 350,000.
350,000.
350,000. So what will her balance be? 35,000. Everybody happy with that? Everybody happy?
Yes,
Okay. 100%. Then they say Amanda is entitled to 10% commission on sales. So now we need to calculate that 10%. So we know that the sales figure here is 650,000. So she's also entitled to 10% of that commission. So we put the full amount in here. Remember what I said earlier? The total salary or the total whatever she is owed, less what is already taken. So there we put the full balance of what the commission that is owed, less the 40,000. Sorry guys, there I said the total salary or total whatever is owed to the partner, less anything she has already taken. And now in the current account, that is exactly what's happening. We have the full 65,000 minus, because we are debiting, the 40,000 that she's already taken of that commission. Okay. Then let's have a look at, okay, so I think we're done with Amanda there. There's just one thing I've noticed that I've missed is we've dealt with the 83,000 merchandise opening balance, but also stationery. And they tell us here, stationery purchase is recorded in the stationery consumed account. So if we go here, there's the stationery consumed account. So now what they're actually telling us is that at year end, there was still 850 Rand left of that 5,000. In other words, if we sell the business today, that 850,000 Rand of consumables have not yet been used and we can still sell it. What's the definition of an asset? There must be control over that asset, and it must give rise to future economic benefit either through the sale thereof, or use. Now we are going to sell it. We haven't yet used it. We can sell it. So it makes an asset. So we can't expend it, in other words. So we will go to stationery and we will say minus 850. And then we can start completing this question. So depreciation we've got, salaries and wages will be minus a 132,960 minus 40,000. Then we will have the water and electricity adjustment. We will have the stationery adjustment. Telephone expenses. Right on sales. And credit losses. Everybody happy with that?
Shouldn't the water and electricity be 5,100?
Are we? Did I subtract it instead of adding it? Thanks for noting that. I didn't see who that was, but thanks. So let me put a highlight around that, and let's give it a sum. 151,303 minus 8,500. And the only other income was the 1710. So we can move all of this up as well. Okay, so then we have our profit for the year. So profit for the year will be the gross profit plus other income less administration and distribution other expenses less finance cost, and that will give me the profit for the year. So let's quickly add that. 650,000 minus the 3,800 settlement discount will give me my profit, gross profit. Everybody happy with that amount? So the profit for the year will be 191,807. And now we need to say, are there any other comprehensive income? There were none. Remember, you get marks for layout. That will give us our total comprehensive income for the year. Everybody happy? Any questions? Okay, we're going to do one final question. Before I do that question, I just quickly need to see if I have the link. Just give me one moment. If I can ask you guys a big favor, I'm posting a link in the chat section, and I'm posting it on the WhatsApp group right now. Can I ask if you guys can please take the next 3 minutes, use the hand functionality, and please fill out the feedback form. In other words, your experience of the session so far, and if you found it beneficial. So you can just click on that link and it will take you to the valuation page. I will also share it on the WhatsApp group. So please complete that for me next 2 minutes. It won't even take you 2 minutes. And if you are done, please just use the hand functionality. It's anonymous, so I won't know who said what. We just want to know whether you found it beneficial and whether we should continue. So please just take a few moments and complete that form for us, please. If you are done, please use the hand functionality to indicate. Guys, please remember to use the hand functionality to indicate when you are done. Thank you. As if you are done, you can also comment in this chat section as well, please, if you can't use the hand functionality. Okay, guys, thanks for the feedback. If you haven't done it yet, you are welcome to continue doing it. I'm going to start with the next question. We will probably not finish it, but we will continue with it next time. I will be communicating with you when that session will be. I'm opening the next question and we will start with it.
Hi, Charles.
Hmm.
Just a quick question. Do you have an idea if this examination is going to be based on MCQ or it has changed to a written?
According to my current understanding, but I'm not the best person to ask in terms of admin. You guys
Yes,
need
I
to
know.
please make sure that you ask Inisa yourself. But based on my
Yeah.
current understanding, it will still be in the electronic format.
Oh, yeah.
That is my current understanding.
Yeah,
I have
no,
not seen any other 100%. I
Yeah.
haven't seen any other notification that it has changed.
Okay, no problem. I'll
100%.
take it further. Thanks.
Please do. And if you do, you are welcome to share it with me. I will appreciate it.
Okay, no problem, Charles.
100%. Okay, I'm opening the question and I'm sharing the screen. Just get the share button. Okay, I am sharing and you guys should be able to see it right now. Okay, so let's, as I've indicated in the previous question, let's use the correct exam technique and start the question by going straight through to the required section. So here they ask us, prepare the valuation account properly closed off in the general ledger of R&B Entertainment. Prepare the capital account of Rihanna properly closed off in the general ledger of R&B Entertainment for the year ended 30 April 2010. And calculate the profit sharing ratio of Chris and Brown on the 1st of May 2010. So you've read the required now, and you know exactly what they want and for when they want it. So let's look at the first account. So what is a valuation account? What is the purpose of a valuation account? So the purpose of a valuation account is to take all the current accounts, the capital accounts, the assets, the liabilities, and all of that to one single account where we will get the value of the partnership, and that can then be divided or split between the partners, especially when we do liquidations or if there's a change in the partnership. So one thing that you need to understand about a partnership is that a partnership only exists for as long as the current partners are alive or part of the partnership. The moment that one partner changes, or the moment that one partner leaves the partnership, the entire partnership needs to be dissolved and a new one formed if that's the case, if a new one is formed. So there will always be a liquidation when a new partnership forms. So always remember that. The moment that a partnership changes, the old one, in layman's terms, dies and a new one is formed. So for a sole proprietorship and a partnership, that will always be the case. As long as the person who is running the business is active and still alive, that business will carry on. But the moment that that person ceases to run the business or passes away, that business comes to an end. That is not the case with a legal entity. The moment that there's a legal entity such as a closed corporation or a company, its longevity is indefinite. It only ends when the company becomes dormant or is shut down for whatever reasons, or if it becomes broke. So that's the only time when a company or legal entity will cease to exist. So up until that date, it can carry on indefinite. That's why you have companies some companies are 200 to 300 years old. It's because of its legal status. It's a legal entity, whereas a partnership and a sole proprietorship is based on the lives of the existing partners or the existing sole proprietor. So in this case, we can clearly see that even by reading by the required, or from the required, that there's a change happening in this partnership. So now we know what we need to focus on. So let's read the question. Guys, before I read the question, can I ask that you make sure that if you are part of this session, if you are in this meeting, to please make sure that you've posted your student number. And for the new students that have joined, there's a link to an evaluation form that I've posted on the WhatsApp group, as well as in the chat section. Please make sure that you complete that evaluation form as well. %. Okay, so let's quickly read the information and see how far we get. Chris Brown and Rihanna were in a partnership trading as R&B Entertainment and shared the profits and losses of the partnership in a ratio of 5:3:2. So what is the partnership? So if we go back to my notes, they say here it's 5:3:2. So 5:3:2. So if you add that together, you get 10. So it's 5 tenths, 3 tenths, and 2 tenths. That's the current profit sharing ratio for the current partnership. So that's the profit share for Chris, for Brown, and for Rihanna. And they shared the profits in that ratio respectively. Due to the claims of a disproportionate allocation, after 13 hours working, your tongue starts to tie. Disproportionate allocation of royalties earned from the hit Umbrero, which consequently led to a war of words amongst the partners, Rihanna decided to quit the partnership. The last date that she acted as a partner was 30 April 2010, the end of the financial year of the partnership. So two things happening there. It's both the end of the partnership and the end of the financial year. Guys, remember the rule about questions. If you have a question, you unmute and you can ask me immediately. Chris and Brown decided to continue with the business activities of the partnership and formed a new partnership on the 1st of May 2010. Chris and Brown agreed to take over Rihanna's profit share equally. So the question asks us to calculate the profit sharing ratio of Chris and Brown. So due to some time constraints, let's focus on that part first, because we have that information. So let's focus on that part first. I'm going to do it on the notes. Okay, so we know that they say that the current split. The current split is 532. Guys, please remember to mute your mics. 532 for Chris, Brown, and Rihanna. So what the question says is that Chris and Brown will take Rihanna's share 50%, 50%. Okay, so how do we do that? So what we're basically saying is that we are going to take, if this is now Chris, and if this is Brown, what we're basically saying is that, let's stick with Chris first. He's got 5/10. And this is very important that you understand this. So if anyone is struggling with this, please unmute your mic and ask me immediately to stop, and I'll backtrack a bit and then continue. So it's 5/10 plus a half of 2/10. Everybody happy with that? What does that equal? So let's change our denominator. Let's make it 20. So that will equal 10/20, which is still a half, 5/10, plus 2/20. So the new profit share for Brown, for Chris, will be 12/20. Let's leave it there for now. Let's go to Brown. He's got 3/10, and we'll have the same situation, 1/2 of 2/10. And that, let's common denominator, let's take it to 20. So we will say 3/10 will give me 6/20 plus 2/20, which will give me 8/20. And now we can simplify. 12/20 also equals 3/5, and 8/20 equals 2/5. Everybody happy with that? Okay, so remember that's the current split, and this is the new split. Okay, let's quickly do the valuation account. Let's read the information. They give us land and buildings, furniture and equipment, accumulated depreciation, furniture and equipment, debtors control, royalties receivable, bank, the capital of each of the partners, the current account of each of the partners. Please pay attention to the debits and the credits. Chris has got a debit account, which means he owes the partnership. A credit account means the partnership. I'm saying this with my making inverted commas. It actually means the partnership owes the partner. The partner's got a favorable balance in the partnership. Then we have the asset replacement reserve, and we have creditors control. Okay, let's read the additional information quickly. In preparation for the retirement of Rihanna on 30 April 2010, the following information must be taken into account. Land and buildings were valued at 350,000 rand, and the partners were advised that the royalties due to them were understated by 50,000 rand. Very important that. So what is land and buildings currently valued at? So there we have the 350,000, and land and buildings is currently 280,000. So what is the difference? What revaluation should happen there? So to get from 280 to 350, the valuation should be 70,000 rand. And then also we need to take into account the debtors. The 37,500 is understated by 50,000. In the valuation account, we need to take that into account. Okay. Additional information. In preparation for the retirement, we already took that into account. 2.3, as a result of the popularity of, okay, no, sorry, wait. Okay, sorry, this is just a copy error. So 2.3, I'm continuing there. As a result of the popularity of Umbrero song, the partners resolved that goodwill must be set at 50,000. What is important to remember of goodwill? Goodwill
Is an asset.
Yes, goodwill is an asset, but what is the main rule regarding goodwill? Internally generated goodwill is never recognized. Goodwill is only recognized when you purchase, when one company purchases another company and pays more for the net assets than what the net assets are worth. But if we as the partners, or we as the partners in this business says, oh, but wait, this song is so popular, we should actually recognize goodwill on this song. Imagine what businesses would be able to do. They will create false assets in their financial statements. So IFRS says only when you purchase another company and you pay for that company more than what its net assets are worth, that more part, that you can recognize, you as the buyer of that company, you can recognize that goodwill. So in a partnership, when will that happen? That will only happen when the partnership changes. In other words, when one partner leaves and another partner joins and a new partnership is formed, and that partner pays for his share in the partnership, then there's a chance of him paying more for his share than what his share is actually worth. Then that more part will attract the goodwill status and will become an asset. So very important to always make sure that you treat goodwill accurately. 2.4. The partners agreed Rihanna could take a fashionable set of microphones of the partnership with a carrying amount of 5,700 as partial payment, highlight partial payment, for her account, and that the outstanding balance on her account will be settled in cash at 31 May 2010. So let's do the valuation account. I'm also going to do that on the notes. I'm going to make the one screen a bit smaller. If you can't see, just let me know. Bigger. Okay, so I'm going to do the valuation account on this side. The valuation account. So let's first take the capital accounts of all the partners. So it's at year end. So the 30th of the 4th, we have the capital of Chris, Brown, and Rihanna. What is the capital account of Chris? Let's go to Chris. The capital account of Chris is 76,000. Is that the value that should go in there? No. What is the current account? What is the current account of Chris as well? 7,000? 7,400. What else should we take into account when we look at the capital account for Chris? Okay, I'm going to do this. I'm going to give you guys 4 minutes to calculate for me the capital account, the amounts for each one of Chris, Brown, and Rihanna. If you are done, if everyone can just lower their hands. If you are done, you can either use the hand function or you can comment done in the chat section. So let's say 3 to 4 minutes. So everyone, if you can just lower your hands, and then if you are done, you can just put up the hands or comment done in the chat section.
Hi, Chancellor. Just want to check in because I can't connect now and everything is fine on my side. Are you still on?
I'm here, Amanda, and I can hear you clearly.
Okay. Okay.
Thanks, Amanda. Guys, another minute. If you are done, please remember to put up your hand functionality, or comment, or you can just comment done in the chat section. Okay, 100%, guys. Let's continue. Okay, so if you look at Chris, what is applicable to Chris is a 76,000 as well as his debit account of 74,000. So you have to deduct that value. And what else? Are there anything else that you want to need to take into account? Everybody is dead quiet now. Can I get some volunteers in terms of the value for Chris?
Sir, I got 68,600.
100%. Let's start with 68,800. Did someone else get something else?
I got the same amount.
100%. 68,000. 600.
600. Yeah.
Brown will have the same situation. What will Brown's balance be?
$95,200.
Yeah. I've got the same amount too.
Remember, guys, we are busy here with the valuation. So what are the two things that's happening at valuation? We have two things happening.
Land and building.
We have the revaluation, yes. That revaluation we said was 70,000.
Yes.
And then we said there was the understatement of the royalty, or the debtors. So debtors control had to be increased with 50,000. So that gives us a value of 120,000 that has not yet been distributed to the partners. So if we use this, the current profit share ratio, where are we we need to allocate that to the various partners before we can start with the liquidation account. So that's what you have to be doing here using the current split. Remember, before a liquidation can happen, you first need to value through a valuation account to make sure that anything that you've not yet taken into account must be taken into account using the current split. And that's what we need to do with the valuation. That's why I said in the beginning, all your assets, your capital, and everything goes to this valuation account, because we need to allocate anything that is happening because of the change in partnership. First, we must allocate that to the capital accounts, and then we can start with the liquidation process. So there's the current split, 532. So 5/10 will equal 60,000, half of it. 5/10 is half. Then we have 3 tenths and 2/10. So if I use my calculator, 3/10 will give me
2028.
36,000 for Brown. And then if I do the math, subtract those two of each other, we get 24,000. And that adds up to the 120,000. And that is the valuation. So it is 60,000, 36,000, and the 24,000. What went to the credit side? Land and buildings. 70,000.
Sorry, Sam.
Yes.
On capital, are we not taking the balances and use it with the calculated with the ratios?
Not at this moment, because remember the previous capital, the previous partners are staying. We are not liquidating the company. We're not dissolving or letting the company completely unravel the partnership. It's only Rihanna that's leaving. The other two partners are staying, and they have a new split that's assigned to them. So we must calculate what the effect will be of this change in ownership, allocated to the various capital accounts using the old split, because we need to calculate what we owe Rihanna as well. And we need her new adjusted capital balance.
Okay, get it.
Happy with that? Okay, so we have the current split. So let's do the valuation. The debtors is 50,000. And there's the valuation account, 120,000 and 120,000. Now let's look at the last required, the 2.2. Prepare the capital account of Rihanna. Okay. And let's see what must go to her. So let's first see what is the balance of her capital account. So her capital account is 60,400. So let's say there on the 30th of the 4th, we have her capital account of Rihanna, and that balance is 60,400. Then we look at her current account. She has a credit balance. So it's her current account of 19,800. And then we have an asset replacement reserve, which is also equity, and a part of it must go to Rihanna using her old share. So if you calculate, so let's use this, let's say asset replacement. I'm going to say year 1. And I'm going to do the calculations here. We say it's the asset replacement reserve. And the balance there that's given is 78,000 at her current profit sharing rate, 2/10. And that gives me
10,600.
Just say again.
15,600.
15,600. Thank you. 15,600. Then we said a company never recognizes internally generated goodwill, but since she is leaving and the two partners are purchasing her part, the structure is changing, and that goodwill will not go to the valuation account, as I've said. But since the structure is changing, we now need to take into account her part of the goodwill as well. So let's say that will be the second one. 50,000 times 2/10. What will be 50,000 times 20%?
That's 10,000.
100%. And then lastly, we need to take into account whatever the valuation account said she must get. 24,000. So it's on the debit side in the valuation account, so it must be on the credit side of her capital account. Okay. So what remains? What is the partial payment?
$5,700.
Yes, they say the partners agreed that Rihanna could take a fashionable set of microphones off the partners with a carrying amount of 5,700 as partial payment of her account, and that the outstanding balance on her account will be settled in cash 31 May 2010. In other words, not in the current year, later. So in the current year, we must make a loan, a liability. So let's use, if I look at the balances here, the only thing that I can throw a microphone in will be, say, furniture and equipment. So and equipment. I'm just going to say here 3 will be that 5,700. And now we need to get the balancing value, because that balancing value will be the loan to Rihanna. I'll make a note here that says that it is the microphone. Okay, if I add up the credit side, to 129,800. 129,800 less the 5,700 will give me
124,100.
100%. 124,100. And there's the capital account for Rihanna. Guys, that's all for me for tonight. I'm just quickly going to unshare and prepare the solution for you to share on the group. So if you are not yet part of the group, I'm posting the WhatsApp number in the chat section right now. So please make sure that you send me your name and module code. And I will add you to the group. I've already shared the first solution on the group. Are there any questions?
But I will practice it, say, when you were doing a new split. Oh, I didn't understand the.
Say again.
I'm saying maybe I just need to practice. I was not understanding the new splits.
Okay, but if you have any questions on that, you can WhatsApp me, and remember the one-on-one consultations.
Okay.
Guys, if there are no further questions, I'm gonna end the session. Thank you for your participation. Please make sure that you've posted your student number in the chat section, and if you haven't done the evaluation form yet, please, it's also in the chat section, the link. Please do the evaluation form for me. I would really appreciate it.
Hi, Charles.
Thank you.
I just want to check, man, if I need one-on-one session, I need to send you a separate WhatsApp on that number, or
Yes,
I
please.
need to tell you on the group.
And no, you can send me a separate message outside the
Okay.
group, and I will send you a link that you must use to access the UNISA platform, and there you can load your query, and I will get it then. Happy with that?
Yes, thank you.
100%. Thank you, guys. Much appreciated, and you guys must enjoy the rest of the evening.
So, Mr. Charles, are you going to
Yes.
share the recording?
The recording will probably be made available in this session, the chat section of this meeting. So this meeting will stay open. You can access the link at any point, and probably by midday tomorrow, the recording will be made available.
All right, thank you.
100%.
Thank you, sir.
Thanks a lot, guys. Enjoy the rest of the evening.
Thank you, Charles.
Thank you.
Thank you.
Thank you. Bye-bye.
So stress over so. Imagine of Nandi download talent. Phone got because it's showing the data and the